All right, it's 5:30 and we are live. We are live with our biannual live stream. Welcome to all of you. Thank you for putting me on your calendar. I am super stoked for today's live stream, and today's live stream is by popular demand. Um, I asked the team to tell me, like, hey, what do people want to know? And they said, people want to know how you spot these big winners, Paul. How are you able to tell that Carvana is going to go up? How are you able to tell that Microstrategy, which is now called Strategy, is going to go up? What about Bitcoin? What about Tesla? So for today, we are going to go on that. We're going to go into this. We're going to talk about what it really takes to catch one of these. Like, because we've caught a few. I mean, you can throw Palantir in there. You can throw, there's others. I mean, our standards are high. Like, I'm throwing 1,000% winners, but we've had a lot of 500% winners. We've had 600% winners. We've had a lot of winners. And what's the key? What's the real key, right? Is there a magic number, right? Is it like the perfect sales growth? Like, is it 50% sales growth? Or is it maybe some magic indicator that tells you, hey, this is setting up to rocket higher? All will be revealed in this live stream. But before I get into that, I want to quickly mention and play you something that is important to me, right? Okay. So, we have done polls and we now know that the vast majority of ATG Digital subscribers come from Banyan Hill days. I think it's like 94, 95%. So thank you all for coming over and staying loyal to me and to us and for supporting us. We are grateful, right? And I want to say a few words. I'll put that back up in a second. I want to say a few words as to why we created ATG Digital, right? One of the things that we could never do at Banyan Hill because of who owned them, it was a giant company called Agora. We could really never fulfill on the promise really that, we really wanted to, which is to be for our community, for our subscribers completely, right? And the primary goal that people always wrote to me about when I was at Banyan Hill is, Paul, I want to attain financial freedom. I want to attain financial freedom, right? And for every person, that's a slightly different thing. We had people, send us pictures. No, we didn't ask them to. They sent us. There are things that, represent financial freedom for some people. For some people, it's that dream car. For others, it's, hey, I paid down my house. For others, it was a yacht. For some, it is living on a beach. For others, it's paying for their kids' college tuitions. We all have these goals. We all have these dreams. We all have these desires. And at ATG Digital, this is our sole and only focus. We do not measure our success by subscriber counts. We're always grateful when people subscribe, but that is not something that we spend a great deal of time on. All of our resources, all of our time, all of our effort really revolves around trying to provide you the best content. The best content is obviously the best investments that we can find. And then really the rest of our resources is spent, we have to send them out to you. So we have email, text, and we spend then the rest of it really taking care of you, customer service. All of your issues, whether it be technology or some other issue, the payment didn't go through. Almost 50% of our team is involved in some way, shape, or form on customer service. And that's it. That's it. That's all we have. And I want to play for you a little video from a page that we have come up with in case you are new to ATG Digital. You don't know who I am. This is the first time you showed up. Something I've said, is something that, struck with you. And, want you to get a sense for like, hey, we've helped people. We have never gotten everything right. I've had bad years. We've also had great years. We have incredible years. We have genuinely made millionaires out of people. That's not a boast. That's not arrogance. There are absolutely people who have started with reasonable amounts of money and have turned it into very large amounts of money. And let's watch a video on our page where if you would like more information, right, and you would like information on pursuing financial freedom through the ATG Digital community, well, check it out. All right.
Working with Paul over the years has provided me with freedom. What's more important than a day-to-day freedom? I mean, we've gone on, my wife and I have gone on some trip. We spent our 40th wedding anniversary at the Fontainebleau in Miami, which is a very iconic, very nice 5-star hotel. Back in 2018, I was around 60 years old, and I decided to retire. And I'm sitting on my patio, and you can probably see the palm trees behind me and maybe hear the ocean behind me. I'm 150 feet away from some of the most beautiful blue water in the world on an island called Cayman Brac. So there's a little better view of my patio. I had this place before I met Paul. It provided me the freedom to retire and then be able to maintain that freedom through playing the stock market. So to have that freedom to go do what you want to do is, to me, the most important purchase that I could make. And it's not been from one stock. It's just been from the whole investment portfolio, let's say.
All right. You will see links in the chat. There will be links maybe provided in the video as well. Dean, our master of affairs, is taking care of that. If you would like access to it, please make sure to go look in the comments, or you can, look us up on our website. I'll put up all the usual things, and you can get it from there. But I want to mention very quickly that actually is Robert. If I'm right, I'm pretty sure I met Robert at one of the conferences that was held by Banyan Hill. I remember him because I remember he had made a lot of money. He may have given me a sneak peek at one of his bigger trades, and I was absolutely thrilled for him. And he gave me a baseball cap, which unfortunately I no longer have. In one of my moves, I think I somehow misplaced it and it's gone. But nonetheless, Robert's achieved financial freedom. We do not take credit for that. Robert is the one that achieved that, but we have definitely helped and played a part. And if you would like to follow Robert's path, well, click on that link, put in your email, submit, and I want to make it clear, we are not Banyan Hill. We do not send you 1,000 emails a day from all sorts of things. You will only hear from us, right? That's it, period, right? I just want to make that 100% clear. It's one of the other benefits of having gone independent, which is like, they were a very much a marketing organization. We are a community-driven enterprise. We are here because of you, and we are grateful for you. Okay, now I do need to keep the lawyers happy, so I need to quickly do various legal disclaimers and disclosures, which is that this video and the content from ATG Digital is not investment or financial advice. It is presented to you as my opinion, our view, our take on the world. Use it as information, engagement, or entertainment. Whatever you choose to do with it, it is your responsibility because it is your money. All ATG Digital content, including this live stream, may contain errors, oversights, or mistakes. Understand that investment operations, which is what, buying or selling a stock, option, crypto, any of these things have significant risks and can lead to the loss of your principal. Bottom line, you could lose money. I, the owners, employees, contractors of ATG Digital, we own, we trade, we transact in the securities that are mentioned in this video and all the content from ATG Digital. Next, we do not take money from company managements to recommend their stock, or from crypto, token creators to recommend their stocks or crypto token. This is widely done, as I like to say, for better and for worse. For gain or for loss, what you get is our unique independent point of view. We have a plethora of content that we publish for free. We've got the Substack, which goes out every market day, Ballman Speculating, which is on Spotify, which comes out once or twice a month. And then we have YouTube, where I am regularly on. We also have social media. I am quite active on X, and we are reasonably active on Instagram and also on Facebook. Next, I'm not ready for this, but let me quickly do this. We actually are able to now offer something called, I would have to show the live stream, but if you go onto our YouTube channel, you'll see that there is a way to subscribe to the channel, and you can have early, exclusive, free access to my regular Tuesday video. In other words, you get it on Monday, everyone else gets it on Tuesday. And now we have also begun to do actual exclusive videos that only go to channel members. Finally, you can go to atgdigital.media. This I can show. If I had shown the YouTube video, I'd have just be showing the live stream, because that's what's showing up when I go to select the channel. But this is our official website, atgdigital.media. In the world of AI and very easy copying of everything, pictures, websites, etc., you do need to make sure that it says atgdigital.media. Do not go to any other website. There are people that are copying websites. There are people that are using my pictures. We cannot stop it. There's just simply too much of it. AI allows you to reproduce and clone things very, very easily. So that is going on. And please, please be careful. Do not put your credit card number in unless you are at atgdigital.media. And next, please never send money to anybody that is asking you to send the money. I do not manage money. I will not ever ask you for money. I will never ask you for Bitcoin. All we do is provide subscription services at atgdigital.media. All right, let's get to the subject at hand, which is about finding big winners. All right, I need to grab some notes here. Usually I do most of my live streams off the cuff, but I all of y'all have taken the time to attend this masterclass, and I want to do justice to it, right? I want to do justice to it. And just so you know, just to keep my focus and concentration on what I'm doing, I am not reading the comments. I can't see them, but you can put them in there. Dean, I believe, is monitoring things, and we will have a question and answer period at the end. All right. Where do really big winners come from? Now, my answers will seem dissatisfactory to people who think there is some magic number. Like I tease the idea that there's some magic number. There is no magic number, right? I mean, there is a sort of a picture, if you will, of what happens when these opportunities present themselves. And there are certain categories of it, right? Now, the easiest category is the hardest category, which is what? Well, if you, let's get this full screen on. If you are, a long-term investor and you've been around a while, you know that markets don't just always go up. They crash from time to time, right? And so the number one easiest way, if you will, at least in terms of analysis, is to buy after a crash. Again, this is when all stocks are cheap, right? I mean, Just imagine in 2009, I was around for this. I mean, all the famous now Mag 7 were trading for nothing, nothing. And yet nobody wanted to buy it. You couldn't persuade anybody to buy it. So that's opportunity number one. I know that will not make people be like, that's crazy, Paul. Of course nobody's buying. What's wrong with you? I get it. But nonetheless, I just want to say, and it'll get to the heart of the answer, where do really big winners come from? The second one is like a little bit more sort of like, it has to do with the most important thing, which is that oftentimes there's some aspect of a business that is poorly understood, right? Or it's like, the business is so new that it makes people negative about it, irrespective of the good things about the business. So a great example of that is Tesla, right? I mean, when we put Tesla into the portfolio, the short position against Tesla was the greatest in history. I think it was like a $20 billion short position. Why did people hate it? Well, people said, listen, EVs are a fad. Nobody wants them. Other people, including some of my colleagues, at Banyan Hill, were like, anybody can make an EV. It's no big deal. Pick your company, GM, Ford, will wipe them off the face of the earth. So irrespective, I mean, and these were all people who didn't drive Teslas, had never test driven one, had no idea what went into an EV. And when I would tell them, well, an EV is very different than an internal combustion engine car, I say, well, an EV has something like, 300 parts for its drivetrain, and the internal combustion engine has over 3,000. They're all like, what language are you speaking? Right? Either way, I was more informed than them. And so I had a different viewpoint about Tesla than what the market did in general. And what the market went with was what the media put out, and the shorts were very active, constantly put out negative stories. So Tesla's business was very poorly understood. And so that meant that as the company refused to go bankrupt, continued to put out products, continued to essentially defy all the negative predictions, there was just always buyers that needed to buy. So oftentimes you can identify these big winners by the fact that they're kind of hated, right? I mean, there's like some commonly cited reason for, like, why this is, from people who generally don't know that much about the company. But nonetheless, the opinion has gone out, it's disseminated widely, and that becomes the sort of like the official view of most investors. And that kind of like that sets up the demand and supply equation, where as things go right, the people that are short, the people that don't own it but need to own it to compete, the hedge funds have to get annual performance to keep their investors. They got to come in and buy. And so they shoot the price higher. So that's number two. Another place for which we see, misunderstandings is what I call cyclical businesses, right? And the best example of that, let me actually start to put some charts up so you guys don't get bored of looking at my face here, is like Carvana, right? So I think I went on was it in 2023? I think it was in October of 2023. And I made a video on this channel that said, Carvana is my comeback stock of 2024. And wow, I mean, that this was like an absolutely insane stock pick, right? I mean, let me see if I can do justice to how well Carvana has done. I don't have the exact date that I made the video, but let's say we go to, let's go to, if I go 4 years, I think 3 years, I mean, the stock has just gone up. I mean, something like, a few %. This doesn't even actually really do justice to what the stock has really done. So what was going on here? Well, Carvana sells used cars. And right after the Federal Reserve raised interest rates, car sales across the board just collapsed. Why? Well, I mean, it's a big ticket item. Now, most people need loans. And when interest rates spiked, It was a multiple problem for Carvana. One, obviously, used car sales collapsed. Second, they had a lot of debt, and everybody is like, well, interest rates are going to go up. They're not going to be able to pay off their debt, and so they're going to go bankrupt. So the market was betting on this going bankrupt, and they made a deal with their shareholders to take care of their debt, and that was what triggered my video. And I think at the point that the video was made, Carvana was $9 or $10. And I think in the video I said, listen, this is going to go ahead and make new highs. And I remember being quite nervous about saying that. Let's put up a 10-year chart. And you know what? It did. It made a new high. It was unthinkable at that time for that to happen. So these cyclical stocks, what is a cyclical stock to begin with? Well, a cyclical stock is something that is very sensitive to one single factor. Interest rates, for example. It could be to economic activity. Some companies are not that sensitive to interest rates, not that sensitive to economic activity. Why? Because, well, whatever they sell, you're going to buy all the time, food, for example. I mean, it's not that sensitive to interest rates, right? So, but cyclical stocks are very sensitive to some element. It might be the economy. And as a result, they tend to have these big, long moves up and then these big, long moves down when that factor goes into place. And is not something that most individual investors, regular investors, can really see. Why? Because most investors are very focused on price. So as Carvana's price collapsed from, what did it collapse from? Let me get this. Let me not put this as, it collapsed from $376, right? That was the high in 2021 to $3.55. I mean, that is what, a 99% decline, right? I mean, effectively, the market's saying this is a bankrupt company, right? And you are taking the other side of that. It obviously takes a little bit of understanding about the world. It also takes a little bit of gumption and courage and guts to take the other side on this. All right, let's go to another one, which for this one too, I'll say that Tesla is a good example, which is that oftentimes there becomes a very rigid position or opinion in the market about a company that manifests itself into people persistently thinking that good news is going to be transitory. In other words, it's going up, but like it's going to go down soon. Or they think it's very temporary. And so as a result, investors in general, and professional investors too, get affected by this, that they're like, okay, it's gone up for 6 months and it's going to go down. Right? Because this doesn't deserve to be up. This business is like, this isn't real. So they're short on a regular basis, or they're underweight, or they like just generally sell too soon. So as a result, there's constantly demand as their anticipations and predictions are wrong, which is like the earnings keep coming out better than what they expect. The sales are better than they expect. And so then the shorts have to cover. And if you're underweight and you're in, the daily competition to compete for investor dollars, if you're running a mutual fund, a hedge fund, whatever, you got to go buy because you're like, well, my competitor owns it and they're doing great. And so if I don't own the stock, well, then, I can't compete. So all of this just becomes like this latent pool of buying because there's always demand for the stock, right? So put it all together. The number one place where big winners come from is either a bear market for the entire market. In other words, something has caused all investors to panic, like what we saw in the global financial crisis in 2008. We saw it in 1999, 2000. which makes all stocks cheap. But that one I know is not satisfying to people because I think that's also a pretty difficult scenario to actually go and buy. I think people are looking for more like the Carvana, the Teslas of the world. Um, and at the end of it is like really some mixture of either a lack of understanding or a deliberate misunderstanding that is pushed out by media. It can be obviously legacy media, but it's social media where something just gets repeated and essentially it becomes like truth. And anyone that disagrees with it, certainly when social media, you will get shouted down. I certainly remember I got an extraordinary amount of emails when I put Tesla into the portfolio at Banyan Hill. I mean, it must have been well over 100. There were people who hated that pick, came to argue with me literally every week. I remember making multiple videos answering these questions again and again, and this is a great example of it. So at the bottom line, right, you've got this misunderstanding, which creates, constant latent demand. Latent meaning that it's always sitting there. And, while the vast majority of analysts like me, gurus like me, focus on what is the company worth, what is the cash flow, I'm much more focused on investment behavior because for me, this is the critical factor. It is always investor behavior that really sets up these big buying opportunities and then sets up cycles of buying, waves of buying that creates parabolic price rises. So, okay, let me quickly move on to next things here. Okay. So I think the most surprising part that I'll say about finding big winners, that it isn't business analysis, it isn't earnings forecasting that is the key to big winners. It's human behavior, it's human actions, and psychology, right? Which is like investing really tests your temperament. Because if you follow the crowd, follow the herd, in other words, if you think like, oh, well, I read this and so I'm going to act. Well, anything that's in the media is is there for a reason. I mean, having worked at a hedge fund, I can tell you plenty of hedge funds put out stuff to either make their stocks move up, make their stocks move down, maybe make competitor stocks move down. There's all kinds of tricks. Or else, I mean, you have to understand that a journalist following business is not a very savvy investor. I mean, if they were, they'd likely be quite rich. They'd likely maybe be running a hedge fund, et cetera. So they are passing on third hand, fourth hand, fifth hand sort of news, or they're passing on things from people that have an absolute agenda. So, okay, let's see here. The last thing I'll say is that the biggest obstacle to capturing one of these winners is that you have to go against the crowd, right? I mean, just imagine me, right? I've been terminated from Banyan Hill, right? I'm kind of trying to find my way in the world of ATG Digital, and I rock up to this computer and I pick a stock that is down 99%, Carvana, and say, this is my stock of the year, right? Yeah, I mean, you better have some conviction, and it better come, you have to have a little emotional fortitude. And I think this is the reason why big winners are not picked by most people, because we don't want to be wrong. Like, imagine how foolish I would look, right? If I came on and put on my stock of the year and Carvana goes bankrupt. I mean, as it is, I get, harassed by people for all my bad picks from Banyan Hill. So, I mean, they still come at me on a regular basis. So if you want to pick big winners, you got to put yourself out there a little bit. You have to have some understanding of the market, the demand and supply balance of the stock, because remember, when prices are low, when Carvana is, at this price, right? I mean, it's down here. What is the psychology? Well, I mean, yeah, the psychology is like, this is untouchable. This thing's going bankrupt. What is wrong with you? How dare you talk about this? How dare you mention this? Or, let's talk about Tesla. This is, what is this? A 10-year chart, right? We bought Tesla in 2018, right? I mean, and it dropped. In fact, I put Tesla into the portfolio, I believe, 2 times. I put it in the first time, and in the original one, I mean, I think like I got so much grief from people, and then the stock went down that I lost my conviction for a little while. And then when it started to rise again, I got my conviction back again, and it dropped by 20% again, but I held fast. I was like, I'm not going to let this one go. And then, yeah, after a bit of a struggle, we had that huge move. And really, the stock hasn't moved a great deal since then. Just closing this out. What about Bitcoin? I'll tell you a story about Bitcoin. I was at my place in West Virginia. I like to go rock climbing. And so I have a place there where, I use as my base. And I remember being at my house there, climbing on a weekend. And I suddenly, I don't know, for whatever reason, I woke up quite early, probably sore from the previous day's climbing. And I picked up my phone and I see that Bitcoin is at somewhere near its low, like, I don't know, 3,100, 3,200, whatever it was, right? And I'm like, there's something in me that just like, this is just too low. And remember, this is coming from the guy, right, that made a video in 2017 saying, avoid Bitcoin at any cost. This is a bubble. It's going to. So here's another element of big winners, which is that sometimes you can have a very strong feeling about an investment one way. And then what had happened between, I mean, I made a video on this, and you can go check. I can make this claim because, the channel is out there, but you can go back and see somewhere in, I don't know, October, November, December of 2017, I made a video saying, avoid Bitcoin at any cost. This is a bubble. But in between 2017 and, the end of 2018, I had spent a lot of time researching Bitcoin. I'd spent a lot of time researching the history of money. And there was a central insight that I lacked in 2017 that I had come to believe in, which is that money in human society eventually reflects the technology of its time. So, I mean, we go in the early industrial era, coins, which, we're able to manufacture more cheaply, slowly over time. Paper as a function of the printing press, and then as a function of computers, of course, Bitcoin was going to, be treated like money. That was the central understanding. And then when I saw it down 80%, I was like, from experience, 80% is just a number where if an investment drops 80%, and if it is real, if there is something that is there, and I don't mean, that people talk about intrinsic value. I'm talking about people's belief, faith, conviction, investment, right? I'm not talking about some financial calculation. I'm talking about human belief, right? If it's there, that's the moment. It may go down another 10%, but if it's there, that's the moment that you got to pick up your guts and you got to buy. And that was the first time I ended up buying. Now, I didn't have the conviction to recommend it until it started to stabilize at $10,000 or so. And of course, it subsequently crashed in the COVID era. But nonetheless, seeing it go from 3,000 to 13,000 gave me the conviction that my insight was correct, my research was correct, and my conviction and courage was correct. All right, last one. this is not intended to be like, a boast session. This is intended to be illustrative of the many winners that I hope all of you have participated in. We put MicroStrategy into the portfolio in 2020. Yeah, I mean, that's how long we own MicroStrategy. Oh, why did we do that? Well, I mean, at the time, MicroStrategy was the only company pursuing this Bitcoin treasury idea. It was so wildly different, so crazy, so insane, right? But this is another aspect of big winners. The company is doing something very different. It challenges conventional ways of doing things. They are pursuing something that almost nobody else is doing, and they're doing it in a way and in a scale that matters, right? I mean, it's not like, Michael Saylor was buying, 10 Bitcoin or 100. He was buying thousands of them, right? And he was telling you he was planning to bet his entire company on it. Yeah, nobody else was doing that. So oftentimes big winners, they feature companies that they're first, they're the biggest, they're doing something different. They're generally not understood by the markets. It will be volatile, as you can see here, but if you hold on, there's some big money to be made. All right, that's the masterclass on how I find big winners. It's primarily about human psychology. It's about taking a viewpoint that is different than what is widely publicized, whether in published media or social media. It is also about having some insight that, because of some work that you've done that gives you the courage, gives you the conviction to act in a moment when everyone else is actually wanting to do the others, which is sell Carvana, sell Tesla, dump your Bitcoin, MicroStrategy's trash, all these things. Yeah, you got to go the other way. All right. We are going to do some questions. Wow, we got a lot of comments. Here. Dean, are you on? If you're on, oh, wow, we have 67 comments here. Check Slack. Got it. Okay. I am going to go on Slack here. Dean, what channel should I be on? Your channel? I'm going to be on your channel. So if you can just feed the questions into there. Alex has a question on Senseonics. All right. Well, let's put up Senseonics here. And talk. That is not Senseonics. That's MicroStrategy. All right, let's get Senseonics up. Let me shut down these other charts so I don't get confused. A lot of charts, a lot of things going on. All right, there we go. All right. Senseonics is a tiny little company. As you can see, a market capitalization of 373 million. Now, many individual investors think that that's a very large amount of money, but remember, Nvidia is worth 4 trillion. So that's, 10 times 373 million would be 3.7 billion. 10 more times that would be, 30 billion. 10 more times that would be 300 billion. So, it's 1,000 times smaller than Nvidia. So this is a tiny, 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 tiny ant of a company, right? Yet this company has the most, at least my judgment, the most efficient and longest lasting wireless continuous glucose monitoring system that is available. It is approved by the FDA. And in a world when we continue to see a an epidemic of diabetes and metabolic diseases, my view is that this is a stock that could take off. There's no guarantee, because anytime you bring a new technology, all the old incumbents will put things in their way. New technology is not welcome. It is fought. It is fought by everybody. It's fought by users. It's fought by the other companies. It's fought by gatekeepers, by doctors. Why? Well, because it requires people to change. Even though there's significant benefits, these are fought. But nonetheless, if you can push through and you can make it, now you can have a market superstar. So, I mean, one of the stocks that we have held on to, despite our general clearing of what I'll call high expectation stock, high growth stocks, which I view as like sort of like really the old bull market, we have kept Senseonics because they continue to go after it. And I have not seen anyone have anything close to it. There's nobody behind them that's any close. There's nobody in front of them that's any close. It is a very large market. It's a real market, and they can genuinely build a very large business about it. And there's a second possibility, which is that growth is slowing for many of the larger medical device makers. And if somebody wants to buy Senseonics, they'd have to pay up. And my experience is that when people come to pay, if the company can drive a bargain, Senseonics is not in the strongest position. Nonetheless, it is a stock that is owned a lot by retail investors. There's no single investor. I think a company would be forced to pay up to buy it, and it would be somewhere, it would be a heroic trade if we got $4 for it. Not a guarantee. You're not, certain of it, but their technology is certainly valuable enough for them to trade at, if it's 372 million, certainly somebody to pay, 1 or 2 billion. Yeah, I think, is definitely possible. All right, Dean, next question. Diamond tier member Liz, longtime supporter, very grateful, says Galaxy Panda buying 1 billion, same players back in 2020. They purchased lock stakes. I'm not sure what stock that is in. What is Galaxy? I don't know what Panda is. These are not stocks that are in any of our portfolios, so I'm not sure what that question is about. And I since I don't know them, I can't comment on them. But Liz, always appreciate you. Kenneth wants to know my thoughts on 3D systems. My thoughts on 3D systems is that this is a very valuable technology that is, since I'll call it the hype trade that happened in 2011 or 12, has never been able to generate sufficient economic and financial results to sustain, regular, consistent buying interest from institutional investors that generates big winners. There was obviously a second period in the 2020, 2021, meme stocks, market where this ripped higher. And I thought at the time, well, maybe, under the scenario of lockdowns, we would radically or rapidly transition to all kinds of new things very suddenly. That didn't happen either. The technology is very valuable. It's widely used by every company, Tesla, SpaceX, General Electric, etc. But the companies that actually make the 3D printers themselves, that specialize in them, they struggle to put together the 3D printers that are used by all those very large industrial companies are not made by 3D Systems. They're not made by Stratasys. They're not made by these specialized printers. So it's a technology that has wildly succeeded, while the stocks that specialize in them have performed very, very poorly. If that should change, we will go look at it. But for now, I see no signs of that. But it is there. And when the stock starts picking up, if we see investors buying into it, if financial results match it, we see some sign of this dynamic changing, we'd come back into it. All right, Dean, let's go to the next one. AEHR, yeah, this is one of these high expectation stocks that many retail investors are chasing. It is not something that I would buy or we would put into our portfolios. It's one of many of these stocks that are in, I'll call it the general semiconductor AI trade that, that there is a lot of social media activity around. It's not something that we are interested in. All right, Dean, next one. Sherry wants to know if we would be a buyer of Palantir. We will not be a buyer of Palantir. I think Palantir, which we owned and unfortunately sold too early before it really went into its hyper bubble stage. I mean, we sold it a little bit under 80, and from there it more than doubled. Yeah, I mean, you have to subvert and ignore all kinds of investment and financial logic to buy a company that is growing at about 20 to 25% at 70 times sales or 100 times sales. We are not going to do that. I mean, you can't, while, it may mean that, like, I mean, it could go higher from here. Nonetheless, my experience from 1999 and 2000 is that once you get in the mindset of doing things that make no sense, you end up being in a trap where you'll buy things that have no economic or financial logic. So then you have no idea when to sell other than price. And then once you get trapped at a high price, let's just say Palantir makes it 200, you're like, I'm making money, it's great. When it drops to 180, you're like, I don't want to sell because, I could have sold it 200. And then it goes from 180 to 150. I'm like, oh, I don't want to sell because it might go back to 180. And I saw a lot of people, friends, colleagues, et cetera, in the 1999, 2000 trap themselves into .com stocks that had, that were either wildly overpriced or had no real business, and ended up where they just never sold and ended up, they lost all their gains. So we sold out early. I'll take that ding. That's my fault. That's, I take responsibility. I'm not going to get every peak right. We're not necessarily trying. Our goal is to try and make money. But Palantir, is an incredibly overvalued stock and is not something that we would pursue. Liz wants to know why AVAX and Mara and Riot are so cheap. AVAX, we no longer own. That is Avalanche. And my view on Avalanche is that this crypto cycle is not going to be like previous cycles. And I think the vast majority of retail individual investors have modeled the next cycle based on the previous cycle. And the big difference is that this is an institutional cycle, and they are focused on very different things. They're focused on actual adoption, actual utility, and importantly, they're focused on token emissions. While we deal with crypto tokens purely as price go up, price go down, they are issuing tokens to pay their expenses. They have expenses. They are significant. And if you don't have real projects on the blockchain, then you have to inflate your currency to pay for it. Mara and Riot are cheap because we just really haven't had a big enough Bitcoin run. And we need, their costs of producing Bitcoin are something like $95,000 to $98,000. And so when that margin difference is 20 to 30% and sustained at 20 to 30%, the miners like those ones will run, in my judgment. Tammy wants my view on Bitcoin. Why did it drop? Within the context of Bitcoin, a drop from 120 to 110 is not much of a drop. This is a very volatile asset. It swings by, I'll say, as much as 15 to 30% on a pretty regular basis. So this is not unusual, not different. I think the immediate news that came out that accompanied this was something about Treasury Secretary saying that they wouldn't buy Bitcoin, but this was not something new to me. Then there was a large seller that sold $2.7 billion worth of Bitcoin. Then there was another big seller. My view is that it's pretty impressive that Bitcoin can hold prices of $100,000, $110,000 when there are people selling $2-3 billion of Bitcoin in one go. Like they're putting through a trade for $3 billion all at once. that's pretty impressive. And it shows you extraordinary liquidity, and also that the people who own it, they're not giving up. So Emily wants my long-term Tesla outlook. My long-term Tesla outlook is that they are a mix of an economic cyclical company, because their car sales are dependent on interest rates, and short-term interest rates are beginning to drop. So that will begin to help Tesla sales. I'll say, middle of next year. And then they have this robo-taxi, which is a brand new business, which is very large, that has the potential to be absolutely huge. And as that scales up, people will start to discount or anticipate those revenues into the future, and that will push Tesla up. I'm long-term bullish on Tesla. People want to know if we are closer to launching the ETF. I think B, who runs the operations at ATG Digital, mentioned that she had put out a survey and that we got significant interest in wanting to launch the ETF. We asked Dan that helps with a lot of the financial issues we have at ATG Digital to go to ETF providers to see, is the level of support sufficient? We have not heard back. So we would like to launch it, but we need, at least when we first looked at it, we needed, I think at the time it was $25 million of committed money to launch it, because that would help pay for the expenses. Otherwise, we would need to put money to launch the ETF. Brian wants to know my thoughts on Momentous. My view is that this is a sort of like now become essentially a purely trading stock driven by the stock price. In other words, once a stock gets to a very low price, you can people who can pump the stock higher can get it to move higher. However, there seems to be nothing that's really going on with their business that suggests that this can turn into a real space business. Lowell wants my thoughts on, I'm assuming it's ST Microelectronics. We sold ST Microelectronics a long time ago. We made, I think, 500-600% on it. So you will have to decide for yourself if you want to keep it. My view is that for everybody, pretty much other than NVIDIA, the semiconductor chip cycle peaked somewhere in the 2021-22 period. This is one of these cyclical businesses that go through big ups and then go through big downs. The big down hasn't happened yet. That's my view. R2H2 wants my view on XRP. My view on XRP is that it is one of the three big crypto that is just shown out by both market capitalization, investor support, it's one of the big three: Bitcoin, Ethereum, and XRP. And I believe that in this crypto cycle, the big three will get the vast majority of institutional dollars. I am BOP on XRP. Jolly wants my view on STRF, STRK. These are preferred stocks that are issued by Strategy. It's one called Microstrategy. And their goal is to convert Bitcoin volatility into some kind of a return. They each have slightly different sensitivities to Bitcoin. The upside is this, which is that it offers arguably a more steady stream of return, because I think most of them are generating yields of something like 10%, something like that. And it's a way to benefit from Bitcoin without necessarily owning Strategy stock or owning Bitcoin. Nonetheless, given that it does represent leverage or debt, in the scenario that MicroStrategy's, Bitcoin leverage setup comes undone, you would face the risk of, that, going to zero in that scenario. But it is, one different way to play Bitcoin. Progress investors want my thoughts on Solana versus to ETH. For me, it's quite easy. I mean, you can look at the market capitalization difference. You can look at the token emission rate of ETH, the number of projects on ETH, and look at the value of the projects on ETH versus Solana. It's a very easy choice, in my opinion. If I was running a hedge fund, and if I had to pick between the two, and assuming I had to pick between the two, you can invest in both, of course. I would pick ETH over those for all of those reasons. I have never truthfully completely understood the allure of Solana. Speed is one that people keep telling me about. Speed is a feature, is not a benefit. And second, the value of what is on Solana to me is unimpressive. It's meme coins. And while meme coins can generate a lot of activity, it doesn't compare to the billions of dollars sitting in total value locked from real projects that have actual, utility that are sitting on ETH. My thoughts on the stablecoin business, CRCL. To be determined, really, what is going to happen with stablecoins. Will this become a winner-take-most business? In other words, they are the only stablecoin that meets all financial regulatory standards. So if you're a business and you want to own a stablecoin and you are required to meet all these financial regulations, Circle is the only one. Is that sufficiently a barrier? To others coming in? Hard to tell. My instinct is that it might be, being that they're the only one and nobody else chose to do it, and also their primary competitor globally, which is Tether. They said they're going to start something in the US, but they haven't started anything yet. So I would like to see them produce results for some period of time. They give away half of their economics to Coinbase. So we need to see the impact on that and what investors choose to value the company like in that scenario, a year from now, et cetera. But it's certainly, very interesting. There are competitors, if you will, in the pure crypto space, but there's no one that has their particular qualities. And if that can be sustained, then this would be an incredible stock because they would have an incredible business. All right. Do I think of MNKD can be acquired? No, because if you're following, MNKD actually bought a company. They announced the acquisition of a company called SC Pharmaceuticals yesterday. This is a absolutely bargain basement buy by MNKD that is using their cash flows from their royalties from Tyvaso DPI. They are getting this company for an absolute song. So I don't think they are going to be acquired. They instead are actually acquiring and building up what looks to be an incredibly strong business. Liz wants to know if Hyperliquid is overvalued. Truthfully, I mean, we bought Hyperliquid, about 2 or 3 months ago when people were worried that, they couldn't handle the liquidity and all these things. And then I saw, comments talking about how Hyperliquid could go crazy. And my general view is that when you see stuff in the media about, this is going to go crazy, I'm a little skeptical that people generally have an agenda behind this. So we sold it out. Is it overvalued? Hard to really tell. Crypto at this point doesn't really go by business value. I mean, it's still very much, especially Hyperliquid, that's a retail individual crypto trade. And so you got to really play the liquidity. Brian wants to know why PayPal is so stagnant. PayPal continues to be stagnant, partly because their growth has stagnated a little bit. Their Venmo business has stagnated a little bit. They have their stablecoin business. There's nothing that is so exciting or interesting going on at PayPal for people to want to go chase it. And remember, gains in and price rises in the stock market are not driven by logic. They're not driven by evidence, but they're driven by emotion. So you got to give people something, like, hey, the growth is going up. Then, you get a lot of activity around it. People going short because like, that's not going to work out, or people going long. No, it's right. And that activity is really what pushes stock prices higher. Renat wants my thought on Robinhood and Roblox. We have sold both of these. My view is this is in that class of very high expectation stocks where there is, people have crowded in. They think they're all going to go to the moon after they've gone to the moon. My experience is that, if you want the second and third moon, you're taking on a lot of risk. And my experience from 1999, 2000 is that you're better out. And that's the view we have taken and implemented at ATG Digital in our portfolios. Nelly wants to know my outlook on coin 10 years out. Coin is Coinbase, and my view on Coinbase is that this is a cyclical stock relative to the price of Bitcoin and crypto. This, in a very violent up and down fashion, will be significantly higher 10 years from now. But there will be some big ups and there will be some enormous downs, kind of like what we have already seen in the stock. I think we've run out of questions. Plus, we're at the 1 hour mark. So maybe one or two. Okay, perfect. We're just crossed the 1 hour mark. Thank you all for attending this live stream masterclass on how to find the big winners. Yeah, check us out. Let me find that link again for where you can sign up in case you have just found us and you want to like, hey, how do I follow up on all this? Where's that link? Give me a moment here. Oh, here it is. Let me put that up again. Share this. You can go here and yeah, check us out. Put in your email address there. Like I said, we are not Banyan Hill. We're not Agora. We do not blast you with 5,000 emails from 6,000 people that you never signed up with. You will only hear from us. You put your email in there. So check us out there. All right, Dean, I think it's going to be time for me to say goodbye. Yes? What do you think? Just respond to me in Slack and let me know. Is it time? Yes. Okay. All right. Okay. Thank you, everyone, for attending this live stream. Thank you to all of you that are subscribers at ATG Digital. Those of you who aren't, we welcome you. Come on. Check us out. See what we're doing. So this is Paul saying thank you and goodbye.